All right. Perfect. All right, what is going on, everyone? We are live. Hope you guys are having a great day. Hopefully you guys are enjoying your week. I know the market's been friendly to us, which is nice given how it's been acting the last month or so. Let me just notify everyone that I'm live. And we are all good to go. How is everyone doing tonight? Welcome to the stream. Any questions related to long-term investing, I am your guy. Welcome to Cube. My name is Bez. Hope you guys are doing well tonight. Let's get this show on the road. Any tickers, drop them my way. And let's get rocking and rolling here, guys. A little also mic check, sound check. Everything looks good. Let me know, guys. I'm just seeing a little bit of lag here. I just want to make sure what's going on. Everything look okay here, guys? Sound is good? Everything's good? Let me slide this over a little bit. All right. Awesome, awesome. Let's see how tonight's stream goes. I know tonight's a very popular night where people like to go out a lot, so let's see what kind of activity we have. I figure, you know what? I didn't have any plans. Market's been treating us well these last few days. I know my portfolio has gained like 8% this week, which has been nice. Figure, you know what? Why not talk to you guys, see how things are going, and discuss the markets a little bit. So if you guys have any tickers you'd like to discuss, feel free to drop them if you like long-term investing. If you're more interested in the day trading type things, you're in the wrong place. So let's hear it, guys. Again, welcome to the stream. Just as an FYI, obviously, market is closed tomorrow for Thanksgiving and also an early close on Friday at 1 p.m. Eastern time. So keep that in mind, all right? If you guys got some tickers you'd like to discuss, we'd like to go through some financials, have a nice little back and forth discussion, drop the tickers in the chat, and we will start discussing them. You know, when I look at this week, it's really funny how if we look at yields, when this 10-year yield starts to dip below 10%, below 4%, the 10-year yield, it's kind of interesting how you start to see a risk-on sentiment. It's really weird. That's almost like that's the threshold where once it starts to dip right below that four handle, you start to see like the IWM, the Russell 2000, really start to pick up again. It's funny how that works. It's like that's like the number, but there's a lot of interesting dynamics going on right now in the market, guys. I'm not sure if you've been noticing, the market has rebounded quite well the last 3-4 days here. Held that 100-day moving average that we were discussing on the last stream. This was a very, very important level to hold here. Significant bounce around this 654 mark, getting not over just the Fibonacci level at 660, but also the 20 and 50-day moving average, and the next Fibonacci level after that at 675. You know, as crazy as it sounds, the market is now only 1.5% off highs. And I know that a lot of you guys are still feeling a lot of pain. And that's because if you look at some other names, right, that I've been warning you guys about, you look at a name like QUBT, you know, you're still looking at a 55% drop off highs while the market started its pullback. Market now recovered most of its 5.5% drop. It's only down 1.5% now. But you still got a name like QUBT in this severe downtrend. Can't get over its 20-day moving average. Can't get over any of its moving averages. Can't even get over the Fibonacci level. Even when the market caught a nice bid these last few days, it still hasn't recouped, previous highs that it made 2 weeks ago. You know, you look at a name like Oklo, you know, a very, very beloved name in the growth space, in the nuclear space. You know, you're looking here at a 54% drawdown here. And there was, look, you see the market rebounded about 4%, right? The S&P 500. Oklo wasn't partaking in any of that. You know, let's see how maybe a popular name in the data center space, CoreWeave. Pretty much the same thing. So it's like market was pushing maybe 16% up on the year, and you had Oklo pushing 150. Market's only 1.5% off that now. Yet CoreWeave still, let's see what the percentage is here. CoreWeave is now 60% off its highs. Crazy. Crazy. So guys, let's hear it. I see a lot of you guys starting to join. Veritone, do we have a ticker for Veritone? We can go through their financials a bit. I'm really curious to see how tonight's stream goes. I know tonight's a very popular night to go out. So I'm not expecting the strongest numbers tonight on the live stream, but I figure, you know what, if I'm not doing anything, why not hop on here and talk some stocks, even though I know most of you guys are probably out, you know, partying, clubbing, and whatever the hell else it is you guys do. Yvonne, okay, all right, okay, cool. So what am I getting at here? Let me just see here. Okay, very similar type movement. I'm curious how these numbers look. I'm not very familiar with Veritone. What I'm saying at here, E, is a lot of these speculative stocks, the bubble has kind of popped on them. And in my opinion, rightfully so. You got pre-revenue companies trading at 20, 30, 40 billion dollar market caps. And I've been telling my group chat for a while now, okay, you're going to see that kind of volatility. But when the market bounces back, we're going to see now if quality bounces back with it. If it's not, then it's not quality. You're not seeing. You could see now, let me put it another way. You could see some disassociation now between quality growth stocks and just pure speculative meme growth stocks now. Market rebounded quite a bit. Take a look at what's come back up with the market. And that'll help kind of guide you in what I'm saying here. The quantum computing companies, a lot of the speculative nuclear companies, the eVTOLs, a lot of these companies that are very pre-revenue, or if they're generating revenue, trading at insanely steep price to sales multiples. They are not, and they're nowhere close to all-time highs. Nowhere close. You know, we mentioned a name like, I'll get to IonQ in a second. Let me just see Veritone's numbers here. I'm curious. I don't know this company at all. Usually I have some background on some names. This one I'm not familiar with. Subsidiaries engage in the provision of artificial intelligence computing solutions. Okay. Did they just get into this whole AI thing of 109 million in revenue, expected to grow 19% next year as well. Maybe EBITDA break even next year, not terrible. No profits in sight for a couple more years, not the worst. What's the balance sheet look like here? Could be a healthier balance sheet. 36 million in cash, 117 million in debt. What's the cash burn? All right, they've burned 45 million in cash the last 12 months. Have these guys, to the person that asked about Veritone, have these guys issued equity at all since the last report? Because they're going to need some financing here, whether it's more debt or some equity. They might issue some shares here to raise some capital. Because if you look at the cash on hand, right, of 36 million, and they've burned 45 million in the last 12 months, they're going to run out of cash in about 3 quarters. So they might need to raise some capital here. So keep an eye out for that. And always with these AI companies, just take it with a grain of salt. Has Veritone been in this AI space long before it became like a buzzword? Ricky, you know, I actually like DraftKings. I was being very vocal about this on previous streams. It's getting to a point now where I can easily justify the valuation. I think a catalyst next year for DraftKings, and this is pure speculation on my part. I've heard nothing about this. And a part of me is actually hoping it happens. I want to see our politicians, our legislators, make prediction markets on brokerage apps illegal. I touched on this last stream. I think it should be illegal for Robinhood, for example, to be able to invest on the app and then in a separate tab on the same app be able to make a sports gambling bet. it's such a awful subliminal message, especially with their young demographic, how you are pretty much saying, investing, gambling, same shit. When it's not. It's not. Yes, the way some of you guys play your options, for sure. But I just hate that they're on the same app. I mean, and no one's batting an eye. No one's saying like, wow, like what? That's crazy. Nobody. But let me put it to a different way. If DraftKings, let's flip the script here. If DraftKings launched a brokerage app that you can now buy stocks on DraftKings, wouldn't we be like, what the hell are you doing? I just want to take the over under here, you know? So if you reverse the roles, you'd be like, what in the world is going on here? So I think, long story short, that could be a catalyst if that does indeed happen next year for DraftKings, because I do think Robinhood and Kalshi are actually now starting to really make a dent in DraftKings business alongside FanDuel, which is owned by Flutter Entertainment, ticker FLUT. I like Celestica a lot. I don't like Rigetti at all. I like MP Materials. I do. Valuate's a little expensive, but the way they're situated in the whole ecosystem, it makes sense. I covered their Saudi Arabia deal on my free weekly newsletter this week. Inspire Medical, yes. So we talked about Inspire Medical on the last stream, and since then, because I did give it a positive, note. Since then, something material has happened. Medicare has now covered. News came out that Medicare will now be covering their installations. Their device is now part of that. So it has just made their device way more in demand. Wall Street analysts, I believe I was reading, are now saying that now allows them to increase the price because the patient's not really paying for it out of pocket now, because they have even larger coverage now for Medicare. So that's a massive tailwind for a name like that. Are there any books you would recommend to get started investing? Absolutely. I actually have the list right here. If you want to take a screenshot, I always keep this list right here. Here are my top books. Red. If you want to take a screenshot of this. It's A Random Walk Down Wall Street by Burton Malkiel. One Up on Wall Street by Peter Lynch. Only Game in Town by Muhammad El-Erian. Deficit Myth by Stephanie Kelton. And Good to Great by Jim Collins. Now, Good to Great might not make sense for you in this list because it's not really a finance book per se. But what it does allow you to do is understand what makes good management teams. So when you are investing, if you do decide you're going to invest in individual stocks, what to look for in the C-suite, the CEO, the COO, how do they operate? Guys, I can't stress it enough. So many of you ask me, like, what's the metrics you look for when investing in individual stocks? Before I even get to the numbers, who is running the company? What's their track record of success? Can you trust them? Do they underpromise and overdeliver, or the opposite? Dog, what's going on, man? Good to see you here tonight. What's your thoughts on market sentiment going into the end of the year, specifically Nebius and Palantir? Okay. So, I have no position in either. In fact, I actually made money shorting Palantir. I have no position in it right now. Let's go one by one. Let's talk Nebius. Nebius is in the data center space, usually coupled with CoreWeave, Iron, and to a lesser extent, Applied Digital. I don't like CoreWeave at all. And I'll start by saying that out of the four, if I had to own one, it would be Nebius. Now let me break down why. I don't like CoreWeave's customer concentration, even though they all share customer concentration. I don't like the news that's been coming out about CoreWeave's depreciation cycles, extending them to present better earnings per share in the near term. I don't like the valuation that much. I worry about the business itself, which, again, they all share with regards to being a commoditized offering of just bare metal GPUs. Where I think Nebius stands out is their attempt to offer a stickier service and a more comprehensive service with software. I think that could help land stickier customers and differentiate them. At least it's an attempt to build a moat. Because if you look at a name like Iron is advantageous in that it looks like they have solid capacity, which I think also comes from where they stemmed, which was being a Bitcoin miner. But if you look like Iron, you'll be like very attracted because it trades like a lower enterprise value to EBITDA multiple. I think people are willing to pay more for Nebius when you look at like 2028 estimated metrics because of the potential for a stickier customer base and higher margin software business. So I think that's why people are more willing to pay for Nebius. The concern I have and why I'm probably never going to touch this space is that the GPU rental side of the business is commoditized. It might see insane margin compressions because there's really how do you compete? You offer your available GPUs for cheaper, right? In an attempt to land larger contracts. That's margin compression. How do you differentiate yourself, right? And then the never-ending need to keep buying more GPUs every time AMD or Nvidia makes a new model, to make sure you have the latest and greatest. So that's a concern of mine and why I'm probably gonna just avoid the space in general. As it relates to Palantir, I'm gonna unpack this one in the most delicate way possible. There's no doubt about the valuation. The valuation is very, very hard to justify. It's been very hard to justify, and that's not really something I can go off anymore. Because I stand corrected. I've been calling it overvalued and hard to justify since $50 a share. The earnings reports have been great. They keep beating. They keep raising guidance. Alex Karp has done a fantastic job. Massive government contract wins left and right. No doubt about that. Now, what I will say is over the longer term, when valuation does start to matter more, I would say Palantir probably has to grow their revenue from $4 billion and change this year to probably $25 billion over the next 5 years to really keep this afloat. Now, the part I was discussing where I'm talking about being a little bit more delicate here is really around why I think Palantir pulled back. Now, I'm not here to get political. I'm not. Okay? But one of the reasons, because everyone is trying so hard to pinpoint why exactly AI names and tech pulled back so badly the last month. Now, I've already mentioned on previous streams, which I've uploaded, why I believe this. There's been a couple reasons I've shied away from talking about just for the sake of staying apolitical, right? But let me unpack this for you guys, what I mean. And you know what? I'll start by mentioning the other reasons why I think some of the AI names started to pull back here. Because if you really look for a tangible reason, it's really hard. Because all these companies reported great earnings. They beat expectations. You could say some of it was priced in, sure. But that doesn't really lead to a 30 to 40% decline like we're seeing. Like in names like Oracle and stuff like that. I list out the reasons here, right? I'll scroll back up here just to keep the stream going and get to some of your questions that are rolling in. I think initially it was a temper tantrum from potentially not seeing a rate cut in December. Once those odds of a rate cut increased, we have rebounded. Okay? And I started off this stream by talking about how when the 10-year yield falls below 4%, it just breeds risk on taking. Okay? So now bullet point number one has kind of been erased, and we've seen the market rebound greatly because of that. So I think that's number one. That's now easing. Number two, I do think there was some spillover from margin calls in crypto. If you listen to Tom Lee, there's some interesting dynamics going on there, some speculation that there was a software bug in some of these stable coins that are supposed to be one-to-one with the US dollar, supposedly fell to 68 cents, caused massive liquidation in other holdings to make up for that, and that bled out over into the equity markets. That's possible. I think the news about Burry buying puts and Peter Thiel selling out of Nvidia, along with SoftBank selling out of Nvidia, also spooked some people. I think maybe I should put more, if I'm labeled them in order of importance, I do think Sam Altman's interview with Brad Gerstner on October 30th or 31st, his response to, listen, Sam, you do $13 billion in revenue, you've made $1.4 trillion in commitments, how do you plan on fulfilling those obligations? And he responded by, Brad, if you want to sell your shares, we have buyers for your shares. It was an absolute awful answer. It came from such a position of arrogance. And I think that spooked a lot of these AI names that are so dependent on Sam Altman coming through, because I really feel like Sam's put himself in a position where he's like, listen, I started this whole AI trend and I'm not going to be squeezed out of it. So, you're going to live and die with me at this point. And then his whole rhetoric around wanting government subsidies and rebates and what have you is just so odd given how much private money is funding this whole entire theme. There's no need for any government backing. It's just very silly to even mention that. So I think any names really specifically tied to OpenAI's spending commitments took it on the chin, Oracle being the perfect point in case, where it's now given back all of its returns since that 3-year outlook they handed out. Lack of transparency from the government shutdown obviously has been a play here. The Mr. Epstein could be, with the files leaking, that could be at play here to a lesser extent. But now let me get to the point where I was getting at to initially start. On November 4th, okay, the Democrats had a very successful day. I live in New Jersey. Just to bring this up for you guys. Jack Ciattarelli ran 4 years ago, lost by like 20 or 30,000 votes, right? Republican. This time around, got smoked by I think 400,000 or 500,000 votes. New York brings in Mamdani. I believe Virginia went from red to blue. Point I'm saying here is not that, oh, Dems are bad. This is not what I'm getting at. But I think the market is getting a little nervous because this could be foreshadowing next year's midterms and even beyond that, the next president. And I do believe that Democrats are going to have a harder stance on regulating AI than Republicans. And this is not an argument I'm seeing really anyone talk about. And the way things are lining up and the way the AI names are pulled back, I don't think it's coincidence. So I really think it's a culmination of all of these events I just laid out as to why I think AI and the big tech trade in general has pulled back so viciously in such a short period of time. I think that has some merit. I do. All right. And I'm curious to hear what you guys think about that. Happy Thanksgiving, Wave. All right, let me get back to some things here, man. Deadass, bro, you made so much money, brother. Appreciate you and thankful for all your value. Dog, thank you so much. For those that don't know what Dog is mentioning about, you've made me so much money. Guys, I run a subscription service for the last 8.5 years full-time, where people see all my holdings. They see all my research reports, my financial models. They get the group chat, one-on-one meetings, all that kind of stuff. I've been doing this full-time for 8.5 years, specifically for long-term investing. If this is something that you guys are interested in, click the link in my bio. It'll take you to view my plans. And be sure to use the code TURKEY for 25% off every month, okay? So, like, if you want to join the green plan, you can hit subscribe. It's usually $50 a month. You add the promotion code, TURKEY right here. We'll knock that down to $37.46 every month. And even the green plan, which is the base, comes with a 2-hour one-on-one meeting to begin. It's our onboarding meeting. So I can walk you through my portfolio and everything. You get my hundreds and hundreds of pages of research on the economy my economic outlooks, my entire portfolio, my financial models on each name that I own, all that kind of stuff. I'm not kidding with you guys. I'm really not the salesy type of guy. No one does what I do, man. And no one goes to the extent that I go to. So be sure to use the code TURKEY. There's no contracts or cancellation fees. So I'd really love to see you guys join because I have names that you guys have never heard of that have been doing very, very well. And as I guess to showcase that, I am up about 40% this year. All right. So that's up to you guys if you'd like to. All right. Let's see what we got going on here. Let's keep scrolling up here. Because I missed some things. Okay. The real question is, how much Oracle did you buy in that dip? Serge, I have no position in Oracle. User, that's a great point you make. ASML, even with rumors of Chinese alternatives. I'm always skeptical of the rumors that come out with regards to Chinese innovation. It's going to be really hard to compete with ASML. I think the valuation on ASML is already kind of a little tough to justify here. It's not my favorite chip name out there. I'd be kind of shocked, though, if they really do have a solid alternative. It's a really, lithography is a really difficult business to replicate, man. Is iron above the 150-day moving average? Etan, good to see you here, man. I don't follow the 150. But let's see here. Let's see. Let's see what we got here. It's over the 100. It's over the 100. All right. Let's see here. Nick, I just mentioned Nebius like for the longest time. I really don't want to rehash it because I just spent like 5 minutes talking about Nebius and Applied Digital as well as CoreWeave and Iron. If I had to pick of the four, it would be Nebius, just to make it a long story short, because of their software stack, it does give me a little bit of confidence that maybe they can carve out some kind of moat there, as opposed to just being a bare metals play that could be quickly commoditized. But I have no position in either of those names. Thoughts on Meta? Great question. Meta is not in my top 3 mags that I like. I still favor Microsoft, Amazon, Google at the top 3. How can I break this down for you in a succinct manner? It's not that Meta's trading at a valuation that I can't justify. It's not like that. When you look at the spending commitments that they're making, right? The figure that they've put out and reaffirmed is $600 billion over the next several years. This gives me PTSD, even though I didn't take any pain from it, because I've never been a Meta shareholder outright. Obviously, I own it through my S&P 500 index. But if we rewind the clock to like 2022, we saw that when Zuck puts his mind to something, he goes all in on it. And it was the metaverse, spending tens of billions of dollars in CapEx to get that going on something that none of us wanted. Now, granted, the market did take it on the chin during 2022, but Meta fell considerably more than its peers. And that's because he was chucking free cash flow at a venture that really had no line of or clear sight of ROI, right? Now, let's talk about what a figure like $600 billion can do that now requires debt to finance, right? To actually make happen. What happens if over the coming years, let's say 3 years, there is no ROI on the $600 billion? How much does that put Meta at risk? I'm not calling it, oh, Meta is going to go under. I'm not saying to that extent. But this is a strain on free cash flow. It's a strain on their profitability. And, you know, now you're looking at less share buybacks. What I would have you do here is keep an eye, if it's not too complex for you, keep an eye on credit spreads on these names, man. The bond market will tell you a lot about people's confidence in Meta. And I think the reason Meta's been pulling back, I draw this parallel all the time, especially in the group chat. You know, in the beginning of the year and last year, Apple was getting dogged because they weren't being innovative enough. So it was lagging the other mags. Now, Meta is pulling back and Apple's hitting all-time highs because now people are respecting that Apple is kind of sitting on its hands, waiting to see how and what the best way of playing AI is instead of just chucking $500 billion at it. Ultimately, what I believe is that Zuck's probably not going to follow through on the $600 billion. That's what my gut comes really down to. I just don't see him fulfilling that obligation, or if it's not an obligation, just that figure in general. I just don't see it. And then can someone please answer me how exactly the $600 billion is being spent? Obviously, a majority of it's probably going to be on GPUs and stuff like that. But what exactly kind of value add are we talking about here from Meta for us as consumers? What smarter ads? What exactly is it going to be? You know, that's going to lead to that ROI. And no one's been able to give me like a solid answer on that. You know. Give me 1 second here, guys. Log in. Welcome to the Cube family, bro. Everything's coming your way in a second. 1 second here. Let me just get you going. Hey, T-Bone, exactly, man. Exactly. 1 second here, guys. I'll get to some of these questions. Dan, I like the match on the 401k. The match is nice. All right. Okay. That's that. Give me 1 second here, guys. Just onboarding right now a new Cube sub. I'm excited, man. Listen, we can hop on a meeting as early as Monday, man, if your schedule allows. Okay, that's that. Now let me add you to the Google Drive. 1 second. Okay. Just do me a favor, Logan. Please make sure, check your spam and promos folders in case it goes there. Because sometimes these documents are very big, these PDFs of my research reports. So sometimes it'll flag it as a promo or a spam. So just keep an eye out for that, all right? Let me see here. I'm adding you right now to the Google Drive. Okay. That's one of them. And now the other one. I'm excited, man. I'm excited. All right, that's one you just should have got notified on. Now here's the other document in the Google Drive. Okay. And I'm happy to use the code, man. For those that don't know, the code's Turkey. For 25% off every month. All right. Not just the first month, all of them. As long as you stay. And there you go. Perfect. Now, guys, for those really quickly that don't know what I'm talking about when I say, like, my models or my reports. So every month, I'll either issue several models or a equity research report. So here is what an equity research report looks like. So you guys maybe have heard of the company Deckers. If you don't know Deckers, you probably know their brands. Hoka is one of them, the running shoes that they make, the athletic brand. And then Uggs, which I'm sure you guys have seen around for sure. So usually they're 30 to 40 pages long, where I'm breaking down the analysis on each company, breaking down the pros and the cons, fundamental analysis, digging into the financials, and then I'll get into my model metrics. Now, what do I mean by my model? These are discounted cash flow models. So here's the one that came accompanied with Deckers. So I'll zoom in for you guys. And for those that don't know, there's a button that's like right here. It's like a rectangle. You could turn the screen sideways, and it'll be much easier to see my live stream if you go in landscape mode. I'm not sure if you guys know that or not, but if you click that little button, it's like right above my finger right here. It'll turn the phone sideways, and you can see my entire screen share. This way you don't have to squint so hard. So essentially what I do here, yeah, Sebastian, any plan, even the base plan, man, all of them, and it's for life, as long as you stay subbed. Yeah, dog, a lot of people don't know about that feature. It's really, really helpful. I'm shocked how little people know. I might actually put like a little next stream. I actually think I might put like a little like notification here to let people know. So essentially, what I have going on here is I'm mapping out how I see UGG, Hoka, Teva, and their other brands growing over the next 10 years. I come to a conclusion on what I believe the weighted average cost of capital should be based on a capital asset pricing model for the equity and the cost of debt. And then based on their capital structure, you arrive at a figure. You figure out a perpetual growth rate and all this kind of stuff. I can bore you guys if you really want me to. I then dig into how I think margins are going to play out, sales and marketing, general and admin, depreciation and amortization, and then I arrive at future free cash flows. And then I discount those future free cash flows at the weighted average cost of capital to come to what I believe is fair value for the stock. I rely on these models almost entirely for my investment decisions, especially when I'm going with individual companies. And if I cannot model a company, usually you won't see me own it. So like back in the day, I used to own a genomics ETF. Now you might be saying, well, why'd you go with the ETF there instead of an individual stock? Because I understand my limitations. I understand that differentiating between one genomics company and another is kind of above my pay grade. It's very difficult for me to say, well, yeah, I can see why this genomics company is better than another one. I really wouldn't be able to. But I'm bullish on this sector, so therefore I'll just own the basket. So usually if I cannot model something out, I will rock with a ETF that covers that space. I do this quite a bit. My portfolio is usually around 20 to 26 different names. 5 to 7 of them will be like about 5 of them will be like ETFs, and then I'll have my blend of large caps, mid caps. I love my small caps. That's where I get aggressive. I'll have usually a 1 to 3% weight in crypto, I'll have some bonds. I'll have some real estate investment trusts. It's very, very diversified. And then usually 2 to 3 companies at any given time, I will actually be short. Some companies that I'm somewhat bearish on. So this is what I issue every month, new models. So this month I'm going to be issuing a model on John Deere, and a few other names I don't want to give out because I actually think they have some pretty nice upside, and my Cube subs are going to be pretty happy about that. And then sometimes they'll also come accompanied with like these 30-page reports. I will not lie to you though, I have started leaning more towards more models because what the feedback I've been getting over the years is that these documents are so long and people don't really want to read 40-page documents. They kind of just want to know what your price target is. So I've started leaning more towards the models based on feedback because people they kind of just want to get to the cut to the chase, you know? And then when I talk about my outlooks and stuff, I'll pull that up for you guys right here. Because when you join, you get access to the vault. So you get my CubeFolio reports, which is how I've been performing over the years. So I always do a document on how my portfolio is doing. I'm not going to share that, obviously, because you'll see my names. But they're usually 120 to 150 pages long with research on every name that I own, a model on every name that I own, what's on my watch list, what's on my chop list that I'm planning on selling, things like that. And then every January, I issue a annual outlook. So here you'll see my 2025 outlook. This one came out to be 150 pages long. And essentially me breaking down where I see some concerns in the economy, the good, the bad, the ugly, where I see opportunities for investment, areas I'm favoring. I do a lot of hot takes in this document. So I have my theme every year. I'll go I do these cube levels. I rate based on cube ratings, stuff like this, 5 out of 5 cubes. You know, I have fun with it to try and make these a little bit more easier to get through, right? Because I know finance can be a little bit boring at times, but essentially breaking down where we're at right now with yields, where I think they're going, where I think earnings per share is going for the S&P 500, how that stacks up versus other Wall Street firms and the average, what my base, bull, and bear case targets are for the market, where I think GDP settles at, where I think inflation settles at. And I just keep going and going and going. And then I'm not going to scroll too much further, but there's 150 pages of data that I've aggregated, and then I make my hot picks towards the end on where I think there's opportunity and where I think there's things that we should avoid. So the new document will be coming out in January. So I have a lot of work to do these next 2.5 months between my year-end document on my portfolio performance, which is up around 36% or so right now this year, as well as my 2026 outlook. Hey, Dark, what's going on, man? I'm currently remember what is this sale you have going on? Also, happy Thanksgiving. Dark, it's a 25% off sale for Thanksgiving. The code is turkey. Happy Thanksgiving to you too, man. Sebastian says, I actually like the research reports. People don't understand how much time it saves them. I know, Sebastian. So you know what? Maybe I'll just do them anyway here and there. Maybe not every month. Maybe I'll just blend it in a little bit better because I have been way heavier weighted towards issuing more models than reports. Maybe I'll start blending them in a little bit more. Drago, we can look at Elf and Lulu. Now, you are bottom fishing here, man, on consumer discretionary. What I will say is when I look at the consumer discretionary, I usually like to avoid my 2 favorite stocks right now in consumer discretionary is probably going to be Amer Sports as well as ON, ON. If I had to own consumer discretionary, I don't just because of concerns maybe about future disposable income. But let's take a look at Elf. Elf just took it on the chin. Have they recovered at all since? Okay, a little bit from that pullback to 68 from 120. This is, I don't get these guys. They always adjusting their guidance. It's unbelievable. If you have a wife or a girlfriend or a sister or something, your best bet is to ask them how their products are trending. Are people still shopping here? You know, with this brand. I'm telling you, they will be more valuable to you than Wall Street analysts when it comes to this stuff. The girls know when brands are losing their value, when they're losing their edge. They'll let you know if Ulta's doing better than Sephora. They'll let you know if Kylie's brands are affecting other companies out there like Lancome or whatever the hell, you know, I only know like 3 brands. But you get what I'm saying. They usually have a really, really good feel for the market when it comes to this type of stuff. They do. T-Bone, they do. And you got to kind of hear them out on this. Now, what I will say is, and I already know what Lulu is going to look like. When I look at e.l.f., you got 16% growth expected next year after 19% this year. You're at 14 times forward EBITDA and 21 times earnings. I'm fine with these numbers. I can justify this valuation. I absolutely can. The problem comes down to, can you trust the guidances? Will they give us another curveball? Management's become very, very difficult to trust. The same goes for Lulu, which I have been talking shit about before this 50% decline happened. But now Lulu's at a place where they're trading at 8 times EBITDA, and they're trading at 14 times earnings. The issue here is, what's the catalyst? You've got single-digit revenue growth and almost no earnings per share growth expected next year after contracting 12% on earnings this year. So I'm just not sure what Lulu is going to do here to really get the ball moving. Now, people have told me they have an opportunity internationally, specifically within men's leisure. Perhaps that's the case, but I'm still going to argue the first thing people are going to cut from their budget are $100 leggings, man. So for me, if I had to own discretionary stocks like this, consumer discretionary, I'm probably rocking with On. Okay? I do like Deckers, which I just showed you, by the way, although I think On is the better name. Look at these revenue growth rates. It's a management team you could trust that usually increases guidance often. The multiples quickly come down to 16 times forward earnings. I'm not here to pitch you on this name, but I'm painting the reason for why I think it's one of the better ones if I had to own a consumer discretionary name. Obviously, do your own research and come to your own conclusion. But, you know, you have 77% growth next year expected in earnings per share, followed by a compounded 30% plus growth after that. So the valuations, the multiples quickly compress on a price to earnings standpoint down to 26 times next year. And the question really comes down to, if I'm getting 77% earnings per share growth next year, I don't know if I have a problem paying 25, 26 times earnings for that. So now, Ian, what's going on, man? Now, you mentioned Nike. I think Nike's still a little bit further away from their turnaround than the market would like to come to terms with. You know, their bounce back is 5% growth now. Really? You're paying 19 times EBITDA? Okay, for 40% jump back in EBITDA? Fine, fair. But 25 times earnings for a bounce back of 50% share in earnings, 50% growth in earnings? Fine. I could justify this, but I really think competition's wearing on them, man. I really, really do. I think On is making a dent in this business. And I feel like they've fallen off a little bit, Nike. And they still have that tough inventory channel to go through. They're still turning the ship around. It's all right. It's finally growing into its valuation. I will say that. Yes, you are getting a 2.5% dividend yield, which is nice. I'll give you that too. I'm not going to say Nike's toward the bottom of this list. It's really not. But it's in the mix. It's in the mix. Maybe this is something I would consider for next year, middle of next year maybe. Specifically because I'll be looking for that trough in earnings, which is expected to be in 2 more quarters. You see this earnings per share figure? So this coming quarter is going to be pretty nasty with 52% drop expected in earnings, a 12% drop expected in the next one, and then growth should return in their fiscal Q4. Jill, how you doing tonight? I can't stand Target. I've been saying this for the longest time. I can't stand Target, man. Ian, I don't think it's a bad stock. I like the contrarian play. Like, I like Nike more from a contrarian play than I do Starbucks. You know? Nick, I'm a fan of Google, man. They're firing on all cylinders, man. You look at it, Waymo is competing well. YouTube is one of the few, if not only, social media companies that's really not feeling the TikTok threat. Bing never really, they thought Bing would make a dent in Google search. No. Gemini's 3 looks superior to ChatGPT. Then you got news that Meta is looking at them for their TPUs, their chips. Now they want now they're competing more with Nvidia now. That's some solid stuff, man. I mean, they are just, and then Google Cloud's also still competing with Azure and AWS. Google really is just firing on all cylinders. It's really hard. I think what you've been seeing from like Nvidia's outflows, I think it's rotation into Google, man. I do. Look at this sustained here. 13 to 14% revenue growth, 18 times next year's EBITDA, and 29 times next year's earnings. A tad expensive now, but man, I could still justify this. I think this is at least going to tickle a $4 trillion market cap. I could see that headline happening. All right, let's see what we got here. Do I think they maintain the earnings? I do. I do think so. Let me see here. Hims is cooked. Not necessarily cooked. I just think it's trading kind of where it should be. I did a report on Hims a couple years ago when it was trading at $6 a share to my subs. And when it started hitting 60, I told them, guys, I don't see much more upside from here. The risk reward does look attractive. Here in the upper 30s, I think that's where it's at, like 38. I could justify the valuation, but it's not something I'm expecting to double anytime soon. Let's see here, guys. Just realized how Oracle is going to buy TikTok when they're underwater on their deal with OpenAI. Sebastian, so I gotta understand. So I don't know if they're necessarily... Do they necessarily own TikTok? It's like they own the data of the U.S. Like they're like data handlers of the U.S. TikTok. I'm really not sure how the exact breakdown is, to be honest. I don't follow Oracle's numbers that closely. I don't know the true nuance of that deal. I'm not following the Fannie Mae story really at all, CC. Yeah, Cam, Nebius with the bounce back to 100. It's like every time the 10-year goes under 4%, it just encourages risk on. What I was saying at the beginning of the stream tonight was you guys really, really, really got to pay attention because the market just bounced back. It's only 1.5% off highs now. Pay close attention to what's catching rebounds and what isn't. Darian, Oracle killed you. I'm sorry to hear that, man. I'm sorry to hear that. I discussed this earlier on stream to make it simple for you and short and sweet. I think their pullback is because people are concerned that OpenAI is not going to fulfill their obligation. And it doesn't help that Oracle is taking on debt to pursue their AI initiatives. Jill, Lilly has been on a tear. Their Reddit 2 tried is going to be ridiculous. There's another name that's just clicking in every way imaginable. 1144 until 1168 I think is coming. I think 1144, 1168 ballpark's coming. I would expect some resistance there. That's 2 Fibonacci levels. That'd be kind of tough. Usually, from my experience, it'll test it, come back to a support level, recoup, and then try again. But it would not shock me to see another, like, no joke, another $40 upside here. Would not shock me. ABTC, American Bitcoin Corp. I don't know anything about this. Are they just a miner, or are they another one of those miners that's transitioning to data centers? This is not a name I follow closely. When it comes to a lot of these names, like these miners, I just rather own the crypto outright. Like, remember how you guys were nonstop asking me about MSTR? How did that pan out? You guys remember when you asked me about BMNR? How did that pan out? I just rather just own the asset, man, as opposed to the derivative. I like Microsoft, man. I do. I think the reason it's been taking on the chin a little bit, again, comes back to the OpenAI. Anyone that's been closer to OpenAI, I think, has been feeling the pain more because I don't think Altman instilled confidence on that interview with Brad Gerstner. I think the market's starting to really say, maybe we can't trust the 1.4 trillion in commitments. Maybe that won't come fully to fruition. So I think the market's discounting some of that. But I think, though, I still think Microsoft's doing great things with AI with regards to Copilot. If you look at the attach rates with what they're doing with AI business with Azure, I think they're still... I still think Microsoft's solid, man. Should you sell your SanDisk? I did rip back. I did tell you I do like Micron more. Keep an eye here, Kem. You really need to break 229. Where are my fibs at? What the hell's going on here? Where are my weekly fibs? Well, that's weird. All right. That's really odd, but all right. Your next support, brother? Yeah, it couldn't get over 222. I'm not going to lie, man. I don't see any near-term support. Harmon, no. I'm a long-term investor. But I'm trying to find maybe a spot if Kem wanted to set a stop loss. And the issue is, I don't really see any support until 170. This is having trouble with this 20-day moving average. Be a little patient here, Kem, if I'm you. But 229 is your resistance level. Harmon, no, I'm a long-term investor. My average holding is usually 5+ years long and growing. ABTC ownership includes Eric Trump and Donald Trump. They own 20% of the company. I usually stay away then, man. Just because so much of it's pump and dump type stuff. All right. Thoughts on Duolingo, MF? I could justify the valuation. The reason I won't touch Duolingo is predominantly because it looks like a one-trick pony to me, and I do think AI could affect their business. It's like a lot of the reason I won't touch a name like DocuSign. Because it's just a one-trick pony. They don't really have anything that I think is that unique, you know? Cam, I agree with that with regards to what you said about OpenAI. T-Bone, are you talking about tokenization, like real estate tokenization? I do think tokenization will be something we see in the future. Thoughts on Microsoft? Sebastian, I just mentioned Microsoft. I'm still a big fan. I really am. Opinion on what's happening with DraftKings. Nick, I think what's happening with DraftKings is concerns over Kalshi on the prediction markets, as well as Robinhood integrating that same stuff into their platform, which I think, as I said earlier on stream, should be illegal. I really do believe that Robinhood should not be allowed to have betting on the same app as your brokerage account. Eric mentions Enovix. Enovix has been on my watch list for the longest time, have not pulled the trigger. Even though I am a huge fan of TJ Rogers and what he did at Cypress Semiconductor, and the track record he also has with Enphase, I need to see more out of Enovix. It's not that their battery doesn't look like it has potential. It's, can you scale the batteries? Can you make them at mass production and not lose the efficiency and the production of the battery? That's what's an issue. They keep delaying their timetables. They are burning cash. I'm not sure how much I trust Raj, and I'm holding off. And then, Eric, if I may add, I'm looking at big guys like CATL out in China, and what they're saying is the future of batteries. They're saying sodium ion. Enovix is going silicon ion. And the reason they're saying sodium ion is because of how plentiful sodium is. So this is tough. This is tough. A lot of people are gunning for this space. And I'd rather pay more for Enovix, knowing that the Fab 2 plant's underway, and then enjoy the ride higher, than take the gamble right now, even though I do like TJ Rogers. And I know for a fact right now, you're saying, how the hell does this guy know so much? You know? I know you're saying that right now. Let me see here. I got to catch up. Yeah, dog. They should separate the two, man. Exactly, Jose. I think they should separate the two. Nick, I like Amazon, specifically because of what they can do on expanding their e-commerce margins that are razor thin. I think what Amazon can do with robotics is very unique outside the Mag 7. Eric, I'm happy to hear that, man. Harmon, okay, so I'm always gunning for 13 to 14% on my portfolio. I'm up 36% this year. I was up 20-something% last year. I got to double check the number. 21%. But obviously, if you go back to 2022, I got nailed. I'm always kick myself for 2022. I took it on the chin, down 35%. 2020, I made like 40-something%. I think because of 2022 setback, and now, yes, I've been climbing back hard, I would say I'm probably around like a 12%, 11% annual. But the last couple of years have brought that back up. I'm hoping to bring that even higher. But yeah, I still kick myself so much for 2022. And then also my deposits. I've been sitting in cash. So that's kind of hurt my return a little bit too. I made some deposits in 2023, 2024. And I kind of let the cash sit there. And that's kind of reduced my return as well because it's just been sitting there. But again, that really shouldn't even impress you. What should matter more is the risk I'm taking on. I have discussed the meta dip. Essentially, I think it's because the market is concerned that Zuck is getting ahead of himself with the $600 billion in spend he wants to commit to for his AI initiatives, and that's increasing the risk of the stock, man. Do I plan on being a fund manager in the future? It's possible, man. It's possible. When I started Cube, about 10 years ago, I did have a long-term plan of getting to that. I really have been solely focused on the subscription because I do like the learning aspect and whatnot. And I do know that I need to develop a track record first. So I really am focused right now on building up my track record. So this way, when I do take that next big step, I have a few more gray hairs and, a nice resume to present. And then I also know that taking that next step comes with way more complexity, and it also will require a team. What I do right now is just solely me, and I'm okay with that, and I love it. But I do know that if I do take that next big step, it will require the right guys to go into business with, which I'm always nervous about, and just having a solid track record that I can present that would say to people, this is what I've done, this is what I've built, this is who I am. So it definitely is something on my long term. Everything I do is long term, guys. Like, my investments are long term, relationships I build with people are always meant to be long term, and even my business plan when I started Cube, always long term. I have had a lot of Cube subs because I'm not their advisor, right? I'm not anything like that. They've been with me for like 8 years now, right? Some of these guys, since I launched the subscription. And it's gotten to a point now where we built such trust with each other that they said, listen, if you do go that route, take custody of the account. And that vote of confidence means everything to me. And if I can speak to the greater industry here, I do think that a lot of these older guys that manage older people's money, let's say, let me give you a prime example. Let's say we got a 60-year-old money manager, right? And you need daily day trading picks. Love, I'm not your guy, man. If you want some very interesting long-term investments that you've likely never heard of on the market, like I rarely ever see these tickers mentioned in my chat on TikTok. I'd love the opportunity to let you know what they are, man, backed by all my research and models. I think they would raise your eyebrows quite a bit. But day trading, I'm not your guy, man. But back to what I was saying. Let's say you have a 60-year-old money manager, and he's taking care of a 55-year-old guy's account. Let's say in 10 more years, the guy dies, right? Not the money manager, but the investor. And he leaves the money to his kids. I don't think my generation, essentially, what I'm talking about, is going to stick with the same guy. I look at the millennials and whatever the next generation after me is. I was born in 93. They're more do-it-yourself, man. They really are. I'm noticing this. And they want things to be in their own hands. And I think that's why Cube has been having so much success. I don't think people want to hand their money over. I think and I also believe that the next generation is way more risk on. I really do think that, man. So when I look at these older money managers, I do think they have some headwinds with their older clients passing their money down to the next generation and it not sticking with them. Yeah, Kem, absolutely. And I think what people are noticing in this pullback the last few weeks is like, wow, I actually am taking more risks than I thought. I think people are coming to terms with that. And I wish the guy was still here. Steven, you're right. Absolutely, it is. It is. Especially as you compound your wealth and you got like $1 million in there, $2 million in there, and you realize, holy smokes. I had one person join Cube, all right? I know I'm going all over the place now, but just for the sake of the conversation. I had someone join Cube with $3 to $4 million in their account, right? $3 to $4 million in their account. Joins Cube. I said, so, we hop in an onboarding meeting, and they're like, so I was like, so talk to me about what you how you're investing. I'm just curious. She goes, so I got my money with this money manager, and I pay him 1%. I said, do you mind if I just look at where you're allocated there? This chick is paying tens of thousands of dollars a year to be in the S&P 500. Why? It's crazy, man. It's crazy. Unbelievable. And I agree with you guys. And I think people are seeing past that and listen, if all you're going to do is park me in the S&P 500, I don't need you. Tens of thousands of dollars is just saying buy the SPY. And then you have maybe some SCHD in there, The people are smarter today, man. In order to earn your keep, you got to go and find them investments that are going to generate some kind of alpha. You got to go and do the homework. Guys, I have a subscription plan, right? You think I would be able to do this for 8.5 years full time? Okay. Just telling people, hey, just Microsoft. No. They're looking for these other opportunities. They're looking for, okay, Microsoft's been great, continues to be great, but what's the next Microsoft? What's the next Tesla? What's the next Nvidia? And if you don't want to take that kind of risk, it's very simple. Jill just said it, took the words right out of my mouth. You can just buy the VOO and chill. Absolutely. Where I really come into play here is you guys don't want to just buy the S&P 500 and chill, and that no problem. Okay, fair enough. That's your choice. If you're going to buy individual stocks, at least allow me to teach you financial statement analysis. You guys are going to go buying all these individual stocks. You don't even know what their balance sheet looks like. You don't know who's running the company. You don't even know what industry they reside in. You don't know anything about valuation. It's crazy, man. It's crazy. A lot of times, man, my job is to just help people avoid grenades. Hi, John, what's going on, man? Good to see you. Glam, I'm not a fan of IonQ. I am staying clear of these pre-revenue or early stage quantum computing companies. I just can't get over the valuation. You're paying 150 times sales. And they're fun, but then you get a 50% pullback like you see in some of these names, man. I just closed out my short on QUBT. Eric, I would not say NVIDIA is overvalued. I wouldn't say overvalued. I just think, where NVIDIA becomes overvalued is if hyperscalers do not grow their CapEx in perpetuity. Where NVIDIA really takes it on the chin, and this is a possibility, not saying it's going to happen, but it's a possibility, is if come this time next year and the hyperscalers are giving their guidance for 2027 CapEx, capital expenditures, for their AI efforts, if that growth year over year is flattened, or even worse, they say, we're going to spend less in 2027, yeah, you got to rethink NVIDIA's growth trajectory over the next 10 years then. Is Google the best Mag 7? I still think now, at this point, Microsoft and Amazon are. Actually, I don't have my series anymore. I passed them 10 years ago, but I don't have them anymore. Because when I left JP Morgan and to work for myself, they expired after 2 years. So I am not any certified anymore. I'm just like a Motley Fool, although I think I'm better. I'm like a Seeking Alpha author, but I think I'm better. Like that. I'm just I'm almost like a blogger. That's pretty much the best way I can put it for you. I create in equity research reports and models that people like to read. It's like when for example, I subscribe to Seeking Alpha, I subscribe to Market Watch, I subscribe to Koifin, I subscribe to Business Insider to unlocked articles. People pay every month for CNBC Pro for additional articles. Except I'm the writer of my articles. Yeah, Eric, I just mentioned Meta, man, a lot. JC, what's going on, man? You moved your auntie and uncle into 2x Amazon. Are you talking about you bought a levered fund that's on Amazon? A levered Amazon ETF? JC? Glam, I like gold, man. I do. I think gold can keep moving higher. Damn, JC. I don't like levered funds. I don't like levered funds. But I teach their own. Teach their own. Why did Reddit explode the last couple of days? I mean, the market's been strong, Braden. Good to see you, man. Market's been strong. That's one reason. Honestly, I would say, why is it pulled back at all? Have you looked into space industry stocks at all? Yes, Eric. They've treated me very well, space stocks. I won't say I'm invested in one right now, but I will tell you about the one I did make great on. I owned Redwire at 7, and I sold out at probably an average of like 20. My highest sales were like 26. But I'm invested in a different space stock now that's also treating me well already. All right, JC. I mean, I don't like it, but I'm still bullish I'm still bullish on Amazon. But you see, here's the thing. Let me make it very clear to JC why you could be bullish on something, and then why going with a levered fund doesn't work out. I'm gonna pull up SOX, which is a semiconductor ETF, right? Very popular one. And then a very popular one that people like to lever up on is SOX L. Okay? Now, I'd like to show you over the last, let me see here, what is it? The last 5 years, if you're a long-term investor like myself. You look here, when the market pulled back from Liberation Day with the tariffs, going back to January of 2021 to April of 2025, SOX pulled back and its total gain was 36%. You would have been down at that point 64% on the levered fund. Because the way the math works, it's whenever there's a sharp move downside, it becomes very hard to make back up. Exactly, JC. So even now, after this magnificent run in chips, SOX L is still trailing over the long term big time versus SOX. And that is why when you own like a levered fund, if you read the prospectus, they're not meant to be held long term. They're really meant to be, pick your spots type thing. All right, let's see here. A-Lab, Braden, too expensive for me, man. I like the name, it's too expensive. Let me see what else we got here. Exactly, Lamb, you nailed it on the head. Albemarle, what's Albemarle's valuation after this run? See what we got here. All right, 18 times this year's EBITDA, 16 times next. Earnings per share is expected to bounce back strong next year. This is looking a little expensive, I'm not going to lie to you. Glam, thanks for the follow. JC, please, I'd love to work with them, man. That'd be great. I'm running a discount code until Cyber Monday ends. Exactly, JC. Exactly. All right. Let me see something here. I just want to check on Albemarle. I just lost my train of thought. Oh man, what did I want to check out? Let me see the chart here on this thing. This thing looks strong though, man. Jill, I have no position in any of the eVTOLs right now, but I am favoring Archer, likely going to start a position in that sometime next year. So you guys have to subscribe to know when and if I do that. Albemarle looks clear to 133. The thing I'm just struggling here is what to do with this valuation, man. Oh, yes, that's what I wanted to check. I wanted to check here historically what it trades at on enterprise value to EBITDA. Yeah, so, all right, let me see. So if I go back the last 5 years, 18 times forward EBITDA doesn't look like it's out of the realm of what it used to trade at. I will say, though, This pocket up here, this is not a name that should probably trade over 20 times EBITDA. You see here, it peaked at in late November at a 17.5 times multiple. It peaked in March of 2004 at a 15 times, 16 times multiple. It's going to be hard to get over 20 times EBITDA on this name. I'm not going to lie to you. So keep an eye out for that. I do think 133 could be coming. That might be a tough level to break, though. That might be a tough level to break. Glam, you like UNH? Look, the valuation makes a lot of sense, but the reason I can't get myself to pull the trigger is because I don't know what this administration wants to do with legislation on healthcare, man, specifically insurance. Roshan, I think Webull's got some great financials that have turned around big time now that they're scaling. I think they're a great buyout candidate. Not that I ever invest for that reason, and again, I have no position. I think Webull looks ripe for Interactive Brokers to buy them out, or a Schwab or Fidelity. Should you load up on oil stocks, Wolf? I like your idea there. I have some Cube subs that are talking about that. I'm actually looking harder at natural gas, believe it or not. But that's all I can say for that, because I don't want to give away too much of my portfolio. User, I'm not a fan of Fubo. I don't really see much catalyst there. I'm just not a fan. I know they're in bed with Disney now and all that, but even Disney can't even stand on its 2 feet at this point. Arc X, what do they own? Space and Defense. Rocket Lab's probably the biggest name in here. Oh, Kratos, L3 Harris, Teradyne, Aero Environment, Rocket Lab. Okay, I do like this. Oh, they even got John Deere in there. Interesting. They're missing some key names here, though, man. Why is Planet Labs not here? It's all right. It's okay. It's more of a defense than it is a space. This is more defense than space, if you ask me. Yeah, Wolf, so you think a Venezuela invasion is going to make oil go wild? What about if Russia and Ukraine reach a deal? That'll supersede that tailwind by a mile. What is Way? Waystar Holding? What do these guys do? Is this a ship? Is this a trucking company? Oh no, what am I thinking about? What am I thinking about Waystar? What am I mistaking that for? What truck company has the word star in it? Its platform offers financial clearance, patient financial care, claim, and payment management, denial prevention. Okay. All right, let's see what we got here. I don't know this name at all. Never heard of it. 400 million in cash, 1.2 billion in debt. No class for Friday. No idea, brother. No idea. Again, pay close attention to that first bullet point above, man. I only really comment on stocks on the long-term vision of it. My long-term feel for it. 300 million in free cash flow is nice. What are the estimates here? I like Archer, but I'm not pulling the trigger just yet. Still burning too much cash for me right now. I do think it'll be in my portfolio, though, sometime in 2026. I've been saying that about the eVTOLs for a couple years now. I just don't want to be early on it. They're still raising debt. They're still raising equity, and rightfully so. I also think the FAA could delay things, but I like that Archer's in bed with Anduril. Good growth here, 15 to 17%. 15 times forward EBITDA. 22 times earnings for good growth. This doesn't look half bad. How can legislation hurt these guys? And what are their margins? If I'm paying 6 times sales, I need to see at least for this growth, for 17% growth, I better be seeing 50% gross margins here. %, very good. Okay, now this checks a lot of my boxes, I would say. I just don't know I don't know much about this company aside from the description. TMC, they just ripped today, I believe. We were talking about it on last stream. My only concern, they're a really cool company, the Deep Sea Exploration. My concern is the balance sheet doesn't have a whole lot of cash, and I feel like it's a heavy CapEx business. So I'm just wondering how much money will they need to really pull the minerals out of the ground, man? Because we were checking last stream, they had like 30 million of cash on hand as of their last reported quarter on my database here. And I'm just thinking to myself, this is a business that I feel like you're gonna need way more than $30 million to break ground. 115 million. I still don't think it's that much. I feel like they should consider on this massive run here, if they haven't done so already, to raise some capital. Because there's no way $100 million is gonna, I feel like from a layman, is gonna be able to get the job done in this type of business. Guys, I want to pause for a minute because I'm at the hour and 15-minute mark. At a minimum, throw the page a follow, guys, if you like what you've been hearing and you're interested in long-term investing. That's number one. If you like day trading, I'm not your guy. And I've broken that to a few people here already on stream today. That, like, one guy wanted to join Cube because he wants day trading picks. I'd love for you to join, but I'm not going to be what you're looking for. If you guys like long-term investing and you'd like to see my portfolio, get in my group chat where we're debating stocks in the economy and crypto daily. You want my equity research reports, my stock research reports that I issue monthly, my stock models, one-on-one meetings, all that kind of stuff. Feel free to check out the plans on my website. You can check them out at CubeWealth.com. You can also just go to my TikTok. It's easier like that. My link is right here, CubeWealth.com, right underneath my logo. It'll take you to my website. You can check the different plans. There's no contracts. There's no cancellation fees. Stay as long as you like. Every plan comes with a 2-hour onboarding meeting. You can view the plans here, learn more about them. What I want you guys to not forget is if you do decide like you want to join the green plan, for example, use the code TURKEY, and that will take 25% off, not the first month, every month. Every month you stay, as long as you stay. There's no contracts, there's no cancellation fees. If you're not happy after a month, we can part ways. That rarely ever happens. But either way, you get the link to book a 2-hour meeting with me one-on-one. What new stock below 20 do you think will make up 5x? I have 2 stocks specifically, Wally, that there's no way I can tell you unless you join Cube, that I believe can do exactly that I have a lot of my portfolio in. Angelica, it is designed for beginners, yes. Yes, it is. That is exactly what it is. We hop on a 2-hour meeting. You get access to my entire Google Drive. So, like, I've also created, like, how to understand dividends. Here's 54 pages I've made on how to understand dividends. How to understand balance sheets, right? I did this back in 2019. Guys, I've been doing this full-time for 8.5 years. Before that, I was at JP Morgan. Before that, I was at Merrill Lynch. I got my degree in finance. I did pass my series, but they've expired now, so it's not even worth mentioning at this point. And then you get my annual outlooks that are 100+ pages long on where I think the economy is going. I'm issuing my new one in January. How my portfolio is doing, all that kind of stuff. Yes, beginners and people who cannot spend the hours that I spend researching. Exactly. So guys, don't forget to use that code TURKEY. And what you can always do too is if you're not ready to start with maybe the higher plans, right? Because the difference between if I can show you guys here, the difference between the red plan and the green plan, the red's the most popular. The red plan, I issue random models every month to the red members and the blue members. So like this month it's going to be on John Deere and a few other growth stocks that I'm pretty excited about, along with quarterly meetings. So we meet quarterly, which is really nice. You'll also get in the group chat, which is a huge value add, even from a networking perspective, because we got some really, really bright people in there. But point I wanted to make was, if you want to start, you can start with the green. It could always upgrade after you're comfortable. A lot of people do that because they're like nervous, like, I don't know who you are, or let me warm up with you first, dip my toe. So you could always start with green. After a month or two, after our onboarding meeting for a couple hours where I walk you through my portfolio, you could then say, I'd like to upgrade. And what I'll do is I'll still honor the same discount code you're locked in at. I have no problem doing that. I'm looking to build a long-term relationship with you guys. So give it a see, give it a look-see, see if you like it. I do think the holdings that I have will surprise a lot of you guys, especially Wally here was saying what stocks do you have that are under $20 that could 5x? There's two right off the bat that I can't wait to talk to you about, essentially. And I'll put my money where my mouth is. If you want to join me on that, it's up to you. I can't tell you to buy it, but you could definitely see why I own it, backed by dozens of pages of research and my models. So I would love for you guys to consider that. So again, use the code Turkey for 25% off. It's good until Monday. After Monday, the code doesn't work anymore. Harmon, I like SoFi a lot. Now, the thing that kills me about SoFi is that I don't own it. And the reason I never touched it is because the business has a lot of ways of making money, and I couldn't properly and confidently model the company out. And because I couldn't model it, I felt like I was in the dark. And because I felt like I was in the dark, I didn't want to pull the trigger on it. But the way that company continues to beat and raise their guidance is just a thing of beauty. So as long as I keep doing that, the stock is looking good in my opinion, man. I have to say. And they beat by a mile. And I do think they're well positioned to grow with the younger demographic. I really do. So SoFi, I gotta tip my cap to them. They've been executing very, very well, and they deserve credit for that. Robert, I have no interest in Open Door whatsoever. I just think it's a meme play, man. I don't like the business model. Brett, what do you like in your Roth IRA? All right, so if I did have a Roth, which I don't, guys, I just have a traditional brokerage account. And the reason for that is that my portfolio, I want access to the entire portfolio at any time. My end-all, be-all, I'm an entrepreneur, man. I don't have a 401k or nothing like that, is real estate. It's how my whole entire family pretty much has made great money and retired. My goal over the next 20 to 30 years is to invest somewhat aggressively. Obviously, I got to be smart, take smart risk, build up the portfolio big time, and then use it as necessary to build up my real estate portfolio. I secured my first duplex earlier this year. I didn't have to touch the portfolio for that. But for future ones, we'll see. But if I ever need access to that capital, I want the liquidity there. Because my end game is real estate. But if I, let's say though, to answer your question, Brett, if I did have a Roth, honestly, it would pretty much just be like S&P 500, some international ETFs as well, maybe some gold and some REITs, things like that. That's kind of how I would be going about it. And I really would just be a set it and forget it type thing. And I would still have my brokerage account where I'm a little bit more active and a little bit more aggressive. I would look at my Roth, in my opinion, just the way Burton Malkiel and Benjamin Graham talk about it. Set it and forget it. In the S&P 500 or something along like a VTI, something like that. And not even look at it. Auto debit and, think about it in 20, 30, 40 years, And I don't think you guys, I haven't done this in a while. Nerd wallet, compounding calculator. I got to drive this home for you guys. I got to drive it home for you. I cannot stress it enough. In fact, I should make it a mission of mine to talk about this every single time I can. So what is the new contribution limit? Contribution limits to your Roth IRA 2026. What do we got here? 7,500, right? We go 7,500 divided by 12 is $625 a month. Okay, let's say we're starting with $1 today, and we're in the market for 40 more years, and we're doing, 625, right? A month, monthly frequency, and let's say we average a 7% return, even though the market's been averaging 10 to 11%. We go 7% because let's assume as we get older, we'll go maybe with bonds and lower our risk to protect our portfolio to make sure we don't get caught up in a crash when we're 50-something years old. You're looking at $1.6 million in this account, just maxing out the Roth for 40 years. You might laugh and say, well, who cares about that million? You're going to want this $1.5 million. You're going to want this. I know, and inflation, all that kind of, you're going to want it. You can't scoff at it, man. You can't. And that's starting right now. So I can't drive it home enough, man. I can't. And then look, if you can, look, I don't want to assume we can average 10% over 40 years. That's tough. It really is. But you see the difference between averaging 7% over 40 years versus 10%. That's the difference between 1.6 million and 3.9 million. You know? But point is, it's about, we do 30 years, no problem. 30 years, this is why you guys got to start young. You see how important that 10 years is? That's the difference between starting at 20 and starting at 30 years old. 10% average return, maxing out the retirement account over 30 years at a 10% return is 1.4 million. I like to use 6 or 7%. You're still looking at 760,000. The amount you put in, though, was 225. So 537 was all return. So of that 762,000, 537,000 was pure return on your money. The other 225 was what you invested. And why not? Why not? I mean, think about this $625, guys. Think about $625. There is a guy out there right now going out. What do they call it? Blackout Wednesday, right? I'll paint you guys an example. This is NerdWallet, by the way, guys. There is a guy somewhere in America right now who graduated from college or high school like 10 years ago, and he's going back to his hometown bar right now, trying to impress people that don't give a shit about who he is. And he's probably going to spend $625 on some dumb shit tonight. Where he could just be putting that money towards his retirement account. You know? I'll give you even a better example. There's guys out there that spend twice this amount on a car. 3 times this amount on a car every month. So I firmly believe you could do it. I know guys that don't consider themselves gamblers that they play around with $600 a month, $500 a month in their DraftKings and they blow every month. There's opportunity cost there, guys. All right, so you got 165 user. I'll do a few scenario analysis for you guys. You got 165 in the account, and you're doing $1,700 a month. How many years? How many years? Joshua, right now we're just talking S&P 500. We're not talking about covered call ETFs. Do I consider day trading gambling? Yes, I do, Harmon. I actually do. User, you got to give me how much years we're talking about here. 30 years? Oh, there you are. There's your other comment. My bad. You're 27. Okay. 65? Okay, so right there, 30 years, call it. Exactly, JC. You nailed on the head. So you're starting here with 165, $1,700 a month at a 7% return would leave it with 3.4 million in 30 years. That's where you'd be tracking here, user. And the true key that you guys got to keep in mind is to make sure you don't blow up the account and have to start over. That's a mistake people make. They start thinking, hey, I'm really good at this shit. Then they go and take unnecessary risk and get blown to smithereens and then have to rebuild that account. That lost time. Oh, it sucks, guys. It sucks. So try to keep yourself, how do I say, humble, essentially. Exactly, Harmon. That's true. All right, 25 years old. So we'll call it 40 years for yourself if you want. You got 100,000, and you're adding 2,500 a month. That's beautiful, man. So you are pacing. Look at that. Look at that. SV is pacing for 8.1 million. With 100K right now and adding 2,500 a month. Now, SV, think about this, man. If you could do 2,500 a month right now at 25 years old, think about what you could do at 35, man, as your career progresses. And I'm trying my best to reduce the nervousness and the intimidation aspect of the markets, man. Luke, what's going on, man? $2,500 mortgage payment? Brother, this is not a mortgage payment. You're lucky if this is a mortgage payment. This is a rent for a one-bedroom today, bro. What you talking about $2,500 a month mortgage payment? That's rent for a one-bedroom today, dude. Especially where me and you live. What are you talking about, Luke? That's a mortgage payment. Bro, I freaking wish. Maybe in 1995 was a mortgage payment. Nah, bro, come on. All right, well, I'm glad you locked in a 275 rate, but the realistic thing here, the reality of the situation is that $2,500 is a one-bedroom apartment today, especially in the Northeast. Like, if you live in that corridor of just Massachusetts down to like Jersey, this is a one-bedroom. Keep contributing through the pullbacks. It's more than 8 million. Exactly, JC. That's why, like, I have a lot of subscribers, right, to Cube that are younger. And some of them have been panicking over the pullback recently. And I'm trying to tell them, like, a few things. Like, you're 21 years old, 22 years old. Like, Bez, I'm down like $1,000, man. Like, this hurts. I said, brother, take it easy. Let me tell you something. $1,000, God willing, is what you're going to make every other day in the future. So don't worry about the $1,000 that you're down over the last 3 weeks. Secondly, you're going to be in this market for another 40 more years. So you should kind of get used to these types of pullbacks because you're going to probably see another 50 of them in your lifespan of 5% pullback in the market. And then third, understand that this is the type you're aiming for way higher than a 10% return. So you got to be willing to accept more volatility. See, we're talking about a 7% return here on these numbers. You don't have to go too risky for a 7% return. Catherine, how you doing tonight? I'm not sure if it's going to be every year, but the point is, in the names that Mr. Market, I should be a little bit more specific. The person I'm talking about is investing in riskier stocks. So when the market pulls back 2%, 3%, they pull back 5 to 7%. His portfolio, not the S&P 500. But when you have a situation like we just saw, market just pull back 5.5%. He gets clobbered. Exactly. So you follow what I'm saying. But I should be a little bit more specific. So I appreciate you highlighting that. Craig says, never paying off our mortgage. Too much opportunity cost on a 4% rate. Exactly, Craig. Exactly. JC says, I'm 50 years old. 01, 08, and 2020 were mint. I hear you, man. If I continue adding 2,500 and get 10% returns, then you could hit 8 million in 30 years. Yeah, roughly. Yes, that's right, SV. That's right. Guys, so I did mention the code Turkey for 25% off, right? If you guys are looking for like riskier stocks that do have that exponential type return, or you're looking to try to learn how to do this stuff, if you're not interested in the subscriptions just yet, at least subscribe to my free weekly newsletter that I write every Monday morning at 8:30 a.m. Eastern Time. Dan, what do I mean by opportunity cost? What I mean here is Craig, for example, has a fixed rate of 4% in the market, right? He in his mortgage, excuse me. He could say to himself, hey, I could just chuck my cash right now at this thing and pay this off. Or I could put it in the market and do better than 4%. If he goes and pays off the 4% mortgage right now, yes, it's guaranteed 4% he made on his money. But let's say the market gives him 7%. The opportunity cost was the 3% he could make, the additional 3% he could make in the market. That's the opportunity cost. Does stuffing code get you 55% off, Luke? No. Good one, man. Good one. Is 25% really not enough, man? I know you make good money, Luke. I could tell. I know where you eat. You've been telling me about the restaurants you go to and the drinks you drink, bro. I know you spend more on cigars in a year. You spend more on one night at a steakhouse than a Cube sub would be for the entire year. And my job is to make the money back for you so it doesn't cost you anything. SV, I know it might be dumb, but will that be a good retirement in 30 years, 7.6 million? It depends. It freaking depends how lavish of a lifestyle you want to live, man. That's a tough. It should be more than enough. Yeah, it should. It should. Because even if you say, let's say like SV, you stop and you say to yourself, okay, you know what? I'm going to pull the money out and I'm going to take the 7.6 million and I'm going to park it in a money market fund, right? And let's say it's paying 3% at that time. You know, you're making $228,000 a year in a high yield savings account, brother. That should cover your annual burn, dude. Like, unless you really still want to keep up with that lifestyle, I don't see how $8 million is not enough to retire. I think where people are wrong, though, is when they think a million's the number. $1 million is not the number. Craig says more retirees are coming forward regarding their life. Most people don't need more than $1 million with no mortgage in retirement. So yes, it does depend. Is the house paid off? Are the cars paid off? Do you mind a simple life? How much is your consumerism in check? Now, Joshua, you mentioned JEP-E and XYLD. I'm not familiar with XYLD, but if I'm assuming because you clumped it with JEP-E, you're talking about a covered call ETF. The one thing I need to make very, very clear with the covered call ETFs is the following. Yes, the yield is beautiful, but if you are at $8 million in your account, right, whatever it is, you do need to keep an eye out because the dividends are not considered qualified. You will be paying tax at them at your ordinary income tax rate. So they're not very tax friendly for the wealthy. So you do have to keep that in mind for a JEP-B or a JEP-Q type of ETF. That's why a lot of the wealthy people, they like munis. They like municipal bonds for their tax safety. And then another thing you got to keep an eye on that we have to maybe talk about a little bit. How do we balance our budgets? How do we balance our economic budget, right? You either cut spending or you bring in more proceeds through more taxation. Is the only way out of this mess that we're in, this 30-something trillion in debt, and these $1 to $2 trillion deficits every year, is the only way out higher taxation? If so, think about that for your retirement accounts. That might be why paying tax up front to be tax-free in the future might be the better play. Just in the case that in the future, taxes have to be insanely higher to help offset our deficits. Because obviously, they wanted to try cutting spending, and that was a big mistake, or at least a big flop. Always a balance, Joshua. Always. Of course. Of course. I think you've got guys out there like your Dave Ramsey's, right? That's his first name, right? Dave? That take it to one side of an extreme. And then you got like your Grant Cardones who take it to the other side. The answer's always somewhere in the middle. It always is. Catherine, I'm a fan of MP. I like MP. Luke, I think NVTS is too expensive, man. Like, I think NVTS is just a little too expensive here. Even on this pullback, you're paying 38 times sales, man. No EBITDA for another 3-4 years. I'm going to pass. Where I think Dave went a little crazy is when he said, I forgot the video, man, where he said, and that's why I put him in the extreme bucket, because he's so anti-debt. And I don't like debt either, okay? Someone said if you could have $1 billion right now, 0% rate for 10 years, would you take it? And he said no. And that's just such a silly thing to say. It's a silly thing to say. Because you could take that $1 billion, put it in a high yield savings account or a money market fund, and make a 3%, 4% risk-free spread. Pocket, what is that, 30, 40 million a year. It's like, I get that you're preaching no debt, but if someone's going to give you $1 billion interest rate free for 10 years, come on. You know what I'm saying? Luke, no one has $1 billion, but that was the point of the... You kill me, man. I think you enjoy giving me a tough time. Who has $1 billion? No one has $1 billion to give to someone for free. Nobody. It's not a bad way to live. It just, he wants to hit it home so much that that's like, all right. Like, come on. Bull, speculative, 5% weight. Drago, you know what? That's a fair... If I was to invest in Bull, that's where I would cap my weight as well. You know? Now, I know you're just pulling my leg, Luke. But, you know, Weebill's numbers look good, man. They do. For a speculative stake, 5%, that's where I'd draw the line. Poet. What's Poet doing these days, man? Someone asked me about it at $4. $5. Oh, they're still $4. You know why I never bought this, Do you know why I never bought this stock, Kemp? I was told from my Cube subscribers, and we have a Slack that we debate stocks all day. And I had a guy of mine ask, hey, Bez, can you look into Poet for me? I said, okay, they look pretty interesting. I started doing some research, like, oh, okay, that's an interesting deal. Okay, that's an interesting deal. That's cool. And then I'm looking things up. I go on YouTube, and I'm seeing that Poet is paying YouTubers to talk about their stock. I'm like, what the hell is this? At that point, I didn't care what Poet was talking about in their financials. Legitimate companies, in my opinion, don't do that. Now, I'm not calling them a scam. I'm not calling them illegitimate. But the second I saw YouTubers had to put a disclaimer at the end of their video that the video was funded by these guys or something to that extent, it was like a year ago now, something like that. I was like, what? I went to the YouTube comments of the guy, and everyone was like bashing this financial content creator. Oh, you're a sellout. You really took money to promote a stock, blah, blah, blah. Let's try to find it. Maybe the YouTube video is still up. Oh, I'll look for it right now. I'm not blowing smoke. This is why I didn't touch the stock. I said, that's a red flag. Poet stock. Let's see if it's out here. Let's see if I can find the video. Let me see here, guys. Where's the video, man? Let me see. 1 second. This is a month ago. Poet stock. It was a while ago. Let me see if I can find this video. All right. Poet stock worth a buy. Let me see here, man. Come on. Where is this video, man? This was 2 weeks ago. Let me actually filter here. Filters. If I filter by this year, can I filter by, like, how long ago it was? What the frick was it, man? Give me 1 second, guys. I want to back what I'm saying. If I have to go to the second page, screw it. 1 month ago, 7 months ago. I don't think it was I don't think it was this guy. Sorry, guys. My dog's going crazy. Nope, it wasn't this guy. I got a cat that comes to the front door all the time. All right. Come on, man. 2 months ago. Sorry, guys. Please, just, I'm adamant on finding this now. For all I know, the video was taken down. Why do all these look exactly the same? I'm just typing Poet Technologies. That's a short. I don't want this a short. 4 months ago. This is Poet. Is it? I'm invest. Ticker symbol AI networking. Ah, here it is. This might be it. You violated my trust. I had recommended your channel. You sold your credibility and did so cheaply. A man's reputation is worth more than $47,000. This was the video. I don't know this creator. I'm not bagging on him. I promise you I'm not. This is the video I saw. Where was the fine print? Where did it say this at the end? Where did it say at the very end? Hold on. Where did it say it? Where was it? Right here. See description for additional disclaimers. Okay, what's the description say? Disclosures. This video was conducted on behalf of Poet Technologies and was funded by a third party. For full disclosure, read this document. Dog, my pizza caught fire. Compensation. On April 18th, in connection with our agreement with Poet. Okay, so this company was... It looks like Poet, if I'm understanding this correctly, guys, it looks like Poet hired a company called LFG Equities. Okay. Or who is LFG Equities? Is it this guy? Is it his page? Who is this guy? I'm not trying. I promise. I'm not trying to like rag on this dude. I don't know this guy. I'm not trying to start shit. I saw this video and this is what stopped me from investing. Okay, I'm not kidding. I don't know who LFG Equities is, but look at the comments. Okay. I'm surprised by the direction you've taken by accepting money to promote an individual stock. Appreciate the honesty about sponsorship. I was not aware that you were sponsored by NVIDIA too. I don't know what that means. I don't know if okay, I don't know if he was or not. I'm so disappointed. I came across the channel a few weeks ago and have been listening to several episodes because I felt you were credible. Disclosing the conflict of interest might promote legal alignment but remain egregiously immoral. Sadly, I have to remove this from one of my subscribed channels. Thanks, Poet, for sponsoring this video and Ryan for stating it. I have now heard of you and will watch what you're doing. I don't know. I don't know. Look, all right? The correlation between the time this video came out and Poet stock price is wild. So, the reason I brought this up is not to rag on Poet. It's not to rag on this creator. It's to make sure you guys know why I didn't buy the stock and why I held off. Because I didn't want you guys thinking I'm blowing smoke. You understand? That's all I'm saying. So with that, we're moving on. I don't know. Ticker Symbol Media Ltd. is a paid advertiser and subcontractor through LFG Equities Corp. The following disclosure refers to LFG Equities and the Ticker Symbol Media Ltd. Okay, we receive either monetary or security compensation from client companies for our services in conformity with the securities law of British Columbia and Canada. Make of it what you will, guys. It looks like it was $47,000. Look at this. $11,000 for one video package. $50,000 for one influencer video package. With Poet Technology. Like, what are we doing? But yo, $50,000 is kind of fucking nice, man. Yo, 50 G's. Dana! Bro, 50 fucking G's, man. Yo, Poet, reach out. Yo, 50 G's? I mean, all I'm saying is, bro, I saw this and I was like, I'm not doing this, man. I'm not buying this stock. Because legitimate companies don't engage in this kind of stuff, man. Now, I'm not saying they're legitimate, but come on. So like, I can't even blame the content creator, honestly. He made the disclosure. He did everything legally he was supposed to do. Bro, $50,000, man. Oh, yeah, that reminds me of that Rush Hour. That reminds me of that Rush Hour clip, man. 50 G's! And then, by the way, they're making a Rush Hour 4. Where he's like, how do you want that? You know, you guys know with Carter. That scene is iconic. But point is, I just wanted to back up what I was saying, guys. I just wanted to back up. I came across this. It turned me off to the stock, and I no longer consider it for investment. That's all, guys. All right. I'm really not poking at the guy. He did nothing wrong. He got paid. He made the disclosure. He did everything he was supposed to do. It just rubbed me the wrong way on Poet. Will, what's going on, man? I love Reddit, man. Someone a year ago on stream asked me, okay, give me one name that's not in your portfolio that you think could be a runner. And I said, you know what? Reddit at 99. And it worked out. And now I'm kicking myself because I didn't buy it. And I put a model out on it. Yeah, Kemp, absolutely, man. Listen, it was just all I could do, guys, is bring the information to your table. At the end of the day, you guys have to make your own investment decisions. You know, JC, that's a good one. I can't believe they pay that much, though, man. That's a freaking lot of money for a YouTube video. Jeez. And I'm over here asking you guys to join my free weekly newsletter and subscribe for $50 a month. I'm in the wrong business. And I'm giving a 25% discount code to talk with you for 2 hours. This guy makes a 20-minute video and gets paid 50 G's. I'm in the wrong business, man. What am I doing? I got this shit all wrong. Jeez. Alright, let's look at Synapsis numbers, man. Nah, Red, it's alright. I want nothing to do with it, man. Why are you lying about discount codes for 50% off? Nah, man, I don't need that, man. Listen. I mean, if it ever happened, I'd have to disclose it as well, of course. But, guys, I don't even have a following like that, man. I really don't. My following is actually really small. You know, I got like, what, 9,500 here on TikTok? Like, my YouTube channel has like 100 followers. You know? So I don't even have the pull like that. But just goes to show, though, you guys should really consider subscribing. Use that code TURKEY for 25% off. Come on, I got some names I think you guys would really like. And again, you just have to promise me that after our meeting, you manage your allocation sizes properly, because you're going to get excited about these names, but you got to promise me that if you do end up buying them, because obviously it's up to you, you properly manage your allocation sizes. All right, Synopsis. This one took it on the chin not too long ago, I believe. You're looking at 15% growth this year. There's a wide span here on 2026 estimates. Most bearish is at 9.1 billion in revenue next year. Most bullish is at 10 billion. The average is at 9.7 billion, all right, which is 37% growth, and then it moderates back to 10% growth thereafter. Big jump in EBITDA expected next year, although, again, the estimates are extremely wide. But that would imply somewhere around a low 20x multiple, which seems very fair to me. And you're looking at 29 times earnings, which looks a tad bit expensive, but I do know this is a pretty quality name. Let me take a look at the balance sheet, because I think I can justify the dip here. And now where it's at. Let's take a look. $2.5 billion of cash on hand, $15 billion in debt, so the balance sheet isn't all that pretty. But you are getting $1.3 billion in free cash flow. It's like 50 times free cash flow. It's a little expensive, although I'm going to assume next year's free cash flow is probably going to be a bit stronger. This one looks all right. It looks decent. Let me see the support. Andrew, you like Tilray, Gevo, and TMC? Dude, if you like those names, Andrew, oh, man, you would like some of the names I'm invested in. Because I think they offer better returns with way less risk. That, in my opinion. All right. Talk about Head and Shoulders, man. At least that's what it looks like to me. 419 is a big resistance level. I think that's going to test. You did get through the 20-day moving average of 404. That's a very bullish sign. You're clear to 419 here. I'm pretty bullish through Q1, although, brother, I wish I could pronounce your name. I don't. I believe that's Greek. Catherine, is that Greek? You would know better than me. We're neighbors. I'm from my roots are from Albania, but I don't know what your name is. I don't know what to call you, but I am expecting a little bit of a pullback in January, just because I feel like a lot of people are up a lot on certain names, and they might want to take profits in January to push off their tax exposure, their tax to April of 2027. So I think that could happen in January. But I think it'll be a short-lived dip, you know? So how would you pronounce his first name there? I mean, he could answer it too, of course, but I figured, Kathy, you know what? You're from Greece. You could help out. All right, guys, we're gonna be live for 5 more minutes because somehow that was 2 hours. I don't know how, but tomorrow, your boy's gotta get some sleep here because tomorrow's the annual Turkey Bowl game, and my boys are expecting me to put up some serious fantasy numbers. Tomorrow, I'm expecting like 13 catches and 3 touchdowns tomorrow. All right, so your boy needs to get some rest. I got to be on the field by 8:30 in the morning. So as much as I'd love to spend the entire night with you guys, I just can't do it. Tomorrow's my day to shine. Tomorrow is where I earn my keep. I remind the boys that their boy Ben still got it. So I as much as I love you guys, I can't sacrifice tomorrow's game. I gotta pop off. I live for tomorrow. Yeah. But the days of tackle are over, man. I'm 32 years old now. I can't be taking those kind of hits anymore, man. You'd be feeling them like crazy. You'd be feeling that shit for like 2-3 weeks. I already got a bum knee. You just can't do it. But guys, at a minimum, join the free newsletter. Angelica, I would love to work with you. Please use that code TURKEY. Let's hop in a meeting as early as Monday. I have some room on my calendar next week. I had like 13 or 14 meetings this week. It's been a long one. And I would love to game plan, talk about how we could prep for 2026, walk you through my portfolio that I think will definitely raise some eyebrows for you. I really believe that. And any of you other guys that are interested in that, again, guys, use the code TURKEY. Let's start this relationship together. If you think these streams are good value, you have not seen what I do for my paying clientele, man, for the last 8.5 years. I really go above and beyond, and I take pride in the work that I do, and I get really carried away at my own demise. I live for this stuff, you know? Like, I had a guy schedule a consultation with me today, because if you don't like subscriptions, you can book a 60-minute meeting. Man, I was talking for so long about the market to this guy, I went an hour and a half. But I don't give a shit. I really don't care. And I know I shouldn't be saying that, but like I love this stuff. Cabroni, I like Rocket Lab a lot. I love Peter Beck. I think the stock's been pulled back because of the greater market, but also to a partial extent, the delay in Neutron. I think that soured some investors, but I think it's temporary. When SpaceX goes public, I think Rocket Lab will have no choice but to go higher because of the sheer difference in valuation. Rocket Lab is the number 2 player in the space. And, SpaceX is probably going to become public at like a $500 billion valuation. And, I think that Rocket Labs could look like a bargain. Granted, it'll have a fraction of the revenues as well, but it'll look like a bargain in comparison. And the rising tide could lift all boats. And then with regard to Redwire, I actually mentioned Redwire earlier on stream today. It was a space stock that I'd done very well with. I owned it at 7, and I sold around an average price of 20. They have not been doing well lately, man. I had to sell after back-to-back abysmal quarterly reports to sell the rest of the shares. I had that whole entire name modeled out with my financial models and all that kind of stuff. Cabroni, if you like names like Redwire and Rocket Redwire and Rocket Lab, dude, I'm telling you, man, at least join the green plan and let's hop on a meeting so I can show you my portfolio. Because if you're interested in names like that, man, I got some ideas for you. They've been doing really well too, but I still think they got plenty of room to go. But Redwire, man, I think they bought out Edge Autonomy to hide the weakness in their legacy business. I think, and I think they overpaid for Edge Autonomy as well, and I think that market is selling them off for that reason. PRTS, I actually can't help you. I have no idea what PRTS is. What sites do I use to analyze stocks? I use Koifin, Seeking Alpha, Market Watch, Business Insider, CNBC. Those are the main sites I stick to. Again, guys, consider joining the plans. Use the code TURKEY for 25% off every month. You're not being locked into a contract with me. You stay as long as you're enjoying the content and the service. I'm telling you, I'm under promising and over delivering. I'm telling you, that's like a lot of people say that the call alone is worth the whole year's subscription. You can name your child after my pro Cube. Don't name your kid Cube, bro. Don't do him like that. Don't do him like that, man. But I appreciate you, man. That would be funny as hell. But at a minimum, guys, if you're not ready for that, join the free newsletter. I send it out every Monday morning at 8:30 a.m. Eastern Time. Again, market is closed tomorrow, half day on Friday, closing at 1 p.m. Eastern Time. Again, I look forward to seeing you guys. I might squeeze in another stream later this week. We'll see. But at least join the newsletter so you guys can get that on Monday. And yeah, guys, I wish you all a happy Thanksgiving if you're in the United States. And look forward to seeing you guys hopefully in the group chat and on an onboarding meeting. And if not, on the next stream. So everyone, take care. We'll talk very soon, all right? Happy Thanksgiving. Angelica, I just saw you joined. So excited to start this off together. All the emails are coming your way. Please check your spam and promos folder because sometimes they'll go there because the documents are so large, these PDFs. And let's hop in a meeting at your earliest convenience. That link's coming your way to schedule that meeting, all right? Guys, take care. Please be safe. A lot of drunk driving goes on. It can be a wild weekend. Please be safe. Enjoy your friends and family. And we'll talk soon. Have a good one, guys. Good night.